Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is August 26th, 2025. I am Luna.
I am JP Morgan.
Chair Powell at Jackson Hole. He seemed to open the door for a September rate cut, mentioning labor market concerns. Now, normally you'd think, okay, easier policy, markets rally. But we saw the S&P dip 0.4%, the Dow down 0.8%. What gives?
Yeah, it's a great point. And that's the key thing here, isn't it? It wasn't just the hint of a cut. It was Powell's language, his focus on those downside risks. That seemed to really shift the narrative. Suddenly, it wasn't just about growth. It was about potential problems. Triggered a risk-off feeling.
Risk-off!
And counterintuitively, the U.S. dollar actually jumped. The DXY index was up, what, 0.7%?
Yeah.
At 98.4. Investors ran for safety.
Even with a potential rate cut looming.
Exactly. And Treasury yields flattened out. Saw the 2-year around 3.7%, the 10-year 4.3%. So now, yeah, the market's pricing in like an over 80% chance of that September cut. But crucially, it all hangs on the next batch of data. So it's very data dependent.
Okay, data dependent. Let's talk data then. Shifting gears a bit, we saw some maybe surprising numbers globally. U.S. new home sales for July, for instance. They actually beat expectations. 652,000 units.
Yeah, pretty resilient demand there, even with mortgage rates where they are. It gave homebuilder stocks a bit of a lift, you know.
And outside the U.S.
Well, Germany's E4 Business Climate Index for August popped up, reached 89.0.
It's the highest in over a year, right?
It is. So maybe a little glimmer of hope for sentiment in Europe's biggest economy. And then Singapore, their core CPI, the inflation figure without food and energy, came in really soft, just plus 0.5% year on year.
0.5. Wow.
Softer than expected. It kind of reinforces that global disinflation trend we've been seeing. Good for rate-sensitive stuff generally. But it does raise a question, doesn't it? Could inflation get too low? Does that signal weak demand instead of just price stability? Something to think about.
That's a really interesting point. Weak demand versus stable prices. Okay, and speaking of potential headwinds, geopolitics, this is where it gets complicated, right? Ukraine's drone strikes on Russian energy sites. We saw oil, Brent futures jump initially about 1.5%, around $67.70 a barrel.
Yeah, that definitely added some volatility. It's a sharp reminder, isn't it? Geopolitical risk is always there, potentially adding inflation pressure, even if prices settle back down later.
So it pets against that disinflation trend we just mentioned.
Exactly. Creates these tricky cross currents for markets and policymakers. Central banks aren't the only factor. And then, completely different angle, but hugely significant. The U.S. government taking that equity stake in Intel.
Right, the CHIPS Act money.
Yeah, converting almost $9 billion in grants into a 9.9% ownership stake. That's a landmark move in U.S. industrial policy.
What does that signal, do you think?
Well, it sets a major precedent. Blurs the lines, between public funding and private ownership. Investors now have to think about potential government influence, maybe partnerships, maybe interference across the whole tech sector, potentially. It's a new variable.
Okay, so Powell pivoting, global data mixed, geopolitical shocks, and now this major industrial policy shift. Lots to track. So looking ahead, what are the key things you think our listeners should really be watching this week?
Definitely Friday's U.S. PCE inflation number. The core figure especially. Market's looking for around 0.2% month on month. That's the Fed's favorite gauge, so it's critical.
Right, PCE on Friday.
And before that, Thursday's second estimate for Q2 GDP, expected around 3% annualized growth. Gives us another look at the economy's pulse.
Yeah.
Oh, and don't forget the Treasury auctions. There's one today, Tuesday, and another on Thursday. Always a good test of market appetite for debt, especially with so much supply hitting.
Got it. PCE, GDP, Treasury auctions, busy end to the week. So we've touched on central banks, global economics, geopolitics, even industrial strategy shifts. It's a complex picture.
It really is. And if you sort of step back and look at the bigger picture, this mix of central bank signals changing, these sudden geopolitical events, plus governments getting more directly involved in industry, it means the old investment playbook. It's constantly being updated. New precedents are being set almost daily, it feels like. It just demands a really adaptive approach.
So for you, our listener, listening to today's JP Morgan and Luna Daily 5-minute briefing, what stands out? How do these threads, inflation, rates, government's role, global friction weave together in your own view? Does it change anything for you? Definitely keep watching those diverse signals. Stay alert.
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters.
Money.ai. Know what moves your money.